Welcome back to Benchmark. I'm Anushan Selvaraja. Now we're going to take a look at the microfinance sector, and joining me is product head from Frontier Research, Travis Gomez. Welcome back to the show, Travis. Now, there is a lot of interest building up in the microfinance sector. What are the reasons behind this?
So if you take microfinance, when you say microfinance, essentially this is lending to, what we'd call the poorest of the poor, basically the people who are unable to access more conventional ways of borrowing. So if you take in terms of the players who are in microfinance, so you have like banks, finance companies, and even these, the people who colloquially we call like the polymudalali type of people. So more recently, what's been happening is there's been growing interest in these sectors, particularly by the conventional finance and the banking sector, because this is seen as a very lucrative industry. So in the past, a lot of the banks, their focus was on the pawning sector, but then after the gold prices fell, they kind of moved away from it. Then again, then they started to get into vehicle leasing, but then again with the tariffs, that sector also fell. So now they are looking to very heavily go into lending to the microfinance sector. So a lot of the banks, they have set up separate units which are focused on this microfinance. So based on based on some of the data that is out there, if you take the size of the industry in terms of the loans, it's approximately about 70 billion. So at the moment it's quite small at the moment, but the important thing is, or why it's important, is that we are lending to a lot of very vulnerable people. So because of that, when there are these issues, there can be a certain ramification. So it's definitely a sector to watch out for.
Right. Now, Travis, there is also this issue of increasing household indebtedness. Now, when there are a number of companies going into the microfinancing field or offering microfinancing options, there's also this trend where people are just rolling their loans. They're getting a microfinance from one place and then they're rolling with another. So what do you have to say for that?
Yeah, that's exactly an issue that is there right now, because now, if you and I go to take a loan, there is some, you have to be part of the crib system, basically, if you've taken the loan. So there is some information out there in terms of how much you have borrowed, what are the limits, and when it comes to banks also, there is stringent regulation on it. But the thing with microfinance is at the moment it's still mostly unregulated. So because of that, there isn't really any guidance in terms of given to how much you can lend, what are sort of like the lending caps, even the caps in terms of the interest rates, because those can get really high as well. So at the moment, that's the danger that we face. There isn't really any control. So as a first step, the central bank has introduced a new Microfinance Act. So that was introduced in 2016, and what that requires is for basically these private companies that are involved in microfinance to be registered and to be part of the system. But at the moment, the focus of the act is still very much on getting those people into the system and getting people to register. So there isn't really much done on in terms of looking at protecting the household and making sure you're not over-lending to them. So this is an area that the central bank is also quite worried about, because some of the recent surveys they have done have shown is that the household, basically the debt levels have gone up. So in 2016, I think one stat that was put out was it's about per household it's about 375,000. So it's not, if you look from a global context, it's not that significant. But what's happening is that the lending to a lot of these vulnerable sectors, particularly when you come to the north and the north central province, particularly these agriculture areas like Anuradhapura, the debt levels over there is much higher than the national average, and these are the people who are typically targeted for microfinance. So because of that, there has to be some regulation that needs to be put in place.
Is microfinance being used for the purpose it's supposed to be used for in Sri Lanka?
When it comes to microfinance, what you should understand is that it plays a big part in terms of boosting the economy and actually improving the livelihood. So if you take a lot of case studies, these successful case studies like what happened in Bangladesh with the Grameen Bank and all of that, is that if it's done right, it has a tremendous impact, because you're lending to the people who are really in most need of this. So, but some of the studies that have been done in Sri Lanka, what they found is that a lot of the lending that is done towards these people are not really for the purpose of like starting up their businesses and for improving their business. A lot of it is really consumption driven. Either it's because they have some emergency and they are short on cash, or in the worst extremes, it's like things like you want to have a more lavish wedding and things like that. People are borrowing for that. So that kind of borrowing is it's not really going to improve your livelihood, and you're just going to get trapped in those cycles of debt. So there has to be So similar to what the banks have, where there is like a stringent process where the bank goes through checks and balances to see whether what are you going to use these funds for. So I think a similar system also needs to be in place when it comes to microfinance as well, to make sure that you're not overlending.
So basically what you're saying is that due to its unregulated nature, microfinance is essentially in Sri Lanka becoming more like loan sharking, right?
There's the danger of that happening.
Thank you very much for joining us, Travis.
Thank you.
That was product head from Frontier Research, Travis Gomez. Thank you for watching Benchmark, and we hope to see you again next time.